how to know if it's a sweep or a run on liquidity. So in this video videos, I'm going to be talking about how to identify what's a sweep on liquidity or what's a run on liquidity, where run on liquidity means market will extend and you keep on moving forward to the drawn liquidity to the 4-hour time frame usually, or equal highs, equal lows, resistance highs, resistance lows, right? A sweep of liquidity is market usually sweeps it out and moves out the opposite way, right? But run liquidity, let's just say we're going bearish and there's a sell side liquidity, market will go through it, go low below, go more below it, and go to a drawn liquidity, right? So let's go how to identify a sweep of liquidity slash a run on liquidity, right? And the first example, we're talking about how to spot a sweep. A sweep is where the market sweeps out the liquidity. If you can see right over here, market moved out the opposite way. Well, how do you know that? How do you know that it doesn't become a run on liquidity? Usually, what I found out, the 15-minute time frame usually tells me if it's either going to become a sweep of liquidity or run on liquidity. But I usually don't care about the 15-minute time frame. If I'm looking for a 5-minute confluence to get in, I don't care about 15. I don't care about that 15-minute confluence because I'm gonna have our time frame. I'm always gonna have a higher time frame. You know what I'm saying? Confluences slash bias with me, right? So I wouldn't care about that. But if you're wondering how to spot what is a run on liquidity slash a sweep of liquidity, right? A sweep. This right here is a clear example of a sweep of liquidity where the market swept it out, moved up higher, right? So this me personally. How I tell a sweep or a run is always a 15-minute time frame. I'll give you guys some proof on this as well. Give me a couple minutes. But this right here is a sweep of liquidity. Market swept it out, and the 15-minute candle closure closed above. So this right here is a clear sweep of liquidity. Ninja liquidity to the upside, which is over here. This right here did a sweep. Eventually became a run on liquidity. As you can see, market just moving from higher, but market does need to retrace before going up higher, right? To collect orders, right? But other than that, this right here is a sweep of liquidity. This right here is a sweep of liquidity, but you could sometimes it could definitely become a run on liquidity where you see the market sweeps it out. But if the high time frame telling me that if the high time frame is telling us that it's gonna go bearish, market will tend to, let's just say, just sweep it out, and now you're thinking the market's gonna go back upside, but eventually comes right back down and goes right back down, like, you know what I'm saying, and eventually closes below the sell side liquidity, right? And as an example, you go vice versa, right? If it closes below or above the sell side or buy side liquidity, and the body has to close above or below the wick. So if this is the wick, the body has to close below it, right? It has to close below it. The body of this has to close below this, and that becomes a run on liquidity. And if it closes above it, that becomes a sweep of liquidity because see price moved up higher. Now we could show you guys more example of this. And do I have any examples around here? Let me see if I have any examples. This right here is a clear sweep of liquidity. You can see market swept it out. What did the market do? Eventually move lower. But guess what? On this time when it swept it out, market does need to come back down before going back up higher, right? And let's identify what's a run on liquidity. Let's see if we can identify that for you guys. Right. You can see right over here where how the high got swept out, but eventually the market direction of bias is high, right? He wants to go up higher. All the way in the all-time highs, market won't sweep it out and come back down lower. Market needs to go to a new all-time high, then come push it to come down lower. If it goes down right from this low, right from this high, comes back down, that doesn't make sense, right? Because market never made a new all-time high, right? So you can think about it. That's how you're gonna use the psychology mind into it, right? So you know what I'm saying? You see how they became this right here, swept out of liquidity a couple of times, but overall the direction of bias is bullish. So market did broke pressure up. Eventually you can see this became that right there became run liquidity to the market to go up higher. Eventually more market went up higher. I could show you guys more example on this as well. Let me see how to identify. I can see it for our sweep of liquidity, and this number set that out. These right here, I could show you guys these right over here. These are like trend line or some shit like that, right? Whatever this is, right? So see how the market 15-minute time frame closed above there, right? When it closed above these trend lines, these are whole trend line where the market will just definitely go over here, right? So when market close above the 15-minute time frame, close above this batch of liquidity, this batch of liquidity, and this batch of liquidity, that means the market will eventually go up higher because market just ran through it and didn't close below it. When it closed below it, that means price wants to move other way around. But when it closes up, the body closes above the wick of the buy side or sell side liquidity, that means the price wants to move that direction where the price is going, right? So this time price wants to go up higher to the all-time high. As we know, market didn't want it to go there, because that's the objective, right? You know what I'm saying? Market didn't want to go to the all-time high, and that's what happened, right? Other than that, let's even give it an example over here. This right here would have been another example. There's a whole trend line happening. But if you were trading this once, right when the market hits this, right when the market hits this right here, right, there's a 4 upper value gap, and beforehand market never touched it, but right when it touched it, you became run on liquidity. Eventually the price moved lower, stripped out of this liquidity. This right here, right when it touched this, probably saying, well, that right there became one on liquidity. Why did that price not go lower? Well, you gotta use your brain sometime, right? During that time, where did the market touch, right? During that time, market touched a 4 of her value gap, right? So you got sometimes you gotta know that once you see out of the liquidity, well, from here, where's the direction of buy from here on end? High buy side, because market sets out liquidity and touch a fair value gap. Sometimes you gotta use your head, sometimes you gotta use your brain, right? Where you can't just be like, okay, right, you ran through that liquidity line, now the market price should be going lower. It did go lower, but guess what? Market touched another conflict in a 4-hour time frame, higher time frame, higher power, right? But other than that, is let me show you guys any more examples I have around here. Let me see if I got it. Let me see, go to the hourly time frame. See if I got any more examples. That got swept out, but eventually became around liquidity in a 15-minute time frame. Where did the price want to move lower? Oh yes, perfect example right over here. Probably saying, right? You can see right here, there's 3 sources of liquidity, right? Price did need to go down because the Joan liquidity was down, the 4-hour box was down, right? Overall box was down to the downside, all the way to this trend line over here, or somewhere over here, right? Price did need to go down there. So over here you can see in the hourly time frame, y'all, now you're saying, well, that is cheaper liquidity in the hourly time frame. But if you go to the 15-minute time frame, perfect example, right? 15-minute time frame, what did the price do? Close below it. Now look, that this body closing below this liquidity line, that right there basically means the higher time frame is with this 15-minute time frame closure below the liquidity line, right? Because the 4-hour Joan liquidity is bearish, 4-hour box is bearish. There's an hourly Joan liquidity to the downside, there's an hourly conflict to the downside, hourly fair value get the price down, right? And you can see it puts down, went right back up. Guess what the price did? All of the hourly time frame closed below it, above it. Guess what the price did? It came right back down, because overall direction of box was down, so the price did go down. And this right here, if you close above it, it would have definitely give us a more bullish movement, but the objective of the market was down. The Joan liquidity was down to the downside, right? Eventually, right when it touches this, it went below this, right? Now the next Joan liquidity is still to the downside, because right when it tipped out his liquidity, guess what it became? The body closed below, market was to move lower. Eventually, once it came here, market closed above the other liquidity line, I think. I'm pretty sure, right? Let me see if I could find out. Yep, it closed above it, I think. I'm pretty not confident though. Oh my goodness, this fucking bastard. We got one there, and we got another one right over here below it. Right, if you go see it here, now this is a clear sweep of liquidity because market closed above it. You can see that. I mean, that right there. See how you just swept that out. Now the market did move lower. You can see this candle that caused a move down to here, sweeping on this low. Eventually, this right here did a clear sweep to liquidity back to the upside. Eventually, the market did go up. You see, but yeah, that is how you can identify one on liquidity / sweep of liquidity. So a sweep of liquidity is basically market closing above it or below it. You know, it's like depending on the buy side or sell side. And a run on liquidity basically means the body of that 15-minute time frame. The 15-minute time frame has to close, by the way. If it closes above it or below it, if it goes above it, that means price might move up higher. If it goes below it, price might reverse, and vice versa. This is how you could identify what's a sweep / a run on liquidity. Thank you for watching.